Taking a look at today's energy markets, let's check in on WTI crude futures as they're selling off today. Crude futures trading lower for a second session. Today we're looking at the futures market down over 3% currently at the $68 level, near the low end of the range for today, as the markets are experiencing some continued selling pressure in reaction to several themes throughout this week. But I think one of the primary drivers today appears to be some disappointment in the China stimulus measures that were announced here recently. And with that, it doesn't appear that they're going to be as big as what the market had anticipated. And I think that's impacting the expectations for demand from a global perspective and creating some pressure here in the WTI space and in the crude space in general, really, when you look at the pricing structure from a global perspective. I think that's one of the primary drivers as to why we're seeing some selling pressure. Also, commodities really are under some pressure today. We're seeing metals selling off and also some other sectors of the commodity space. And I think a stronger dollar could be one of the factors contributing to that. So again, I think you got some headwinds here in a couple different areas, but the primary driver appears to be the idea of demand moving forward, with China maybe not regaining its footing as strongly as what the market had anticipated. So we're seeing WTI under some pressure. Now, looking at the general trends, WTI now giving up this ground today is trading back down closer to the low end of the range for the past year, as we are now moving back towards the recent lows, which also correspond with the lowest levels for the year. So back below 70, experiencing some selling pressure and moving back down towards the lows. Now, one caveat to that in the energy space today would be natural gas, which is up over 10% currently in the market, just shy of that $3 level. Again, reaction to some of the storylines here the last week, post-election, and the idea is that Europe has indicated that they intend to import more and more LNG or natural gas moving forward from the United States. So that's, I think, the biggest driver as to why we're seeing natural gas moving higher here, as the potential demand for LNG increases from a global perspective. And that's having a significant impact, at least short term, in the pricing structure, as natural gas is moving up towards the highest level in several weeks, but certainly regaining some significant strength today, up over 10% in today's price action.